Yo, what's going on, believers? Happy Monday. It is Monday, July 17th, 2023, and I'm going to be doing a uh, more of an outlook than a review for sure. So, yeah, just going to be doing a weekly outlook for the rest of the week. After last week, I wanted to give the market a little bit of time to catch his breath, and so I'm going to, with more data now to be able to reference since Monday's trading has ended and Tuesday's trading has actually just begun a couple of minutes ago. I want to, like I said, be able to now with more data provide some sort of outlook for the rest of the week and going into the end of the month, but mostly just for the week. But here's the economic calendar for the week. Pretty quiet week, especially compared to last week and what's coming up next week. But today there was some inflation related news on the manufacturing side. Got some more inflation related news tomorrow morning. So actually a couple of sets of news, 7:30, 8:15, and then at 9 tomorrow. Wednesday, a bunch in the morning with the housing market and crude oil. Bonds in the afternoon. Thursday, as always, unemployment claims, more housing market stuff, more inflation related news. Something about the Fed should be interesting. Then Friday, nothing until the afternoon. I'm not even really too sure. So I see oil, something to do with oil. So there is that. Now getting into the charts, my favorite part. So I'd like to start off with the dollar. Keep it simple, but I'm actually going to bring up. I mean, I guess I can do it here. Bring up the weekly, and so just keeping in mind a very large expansion to the downside last week, clearing a lot of lows that I had been looking forward to reach prior to this push higher, but seeing how it broke down, consolidated below this resistance, and then with CPI was able to slam down. So as far as a level for dollar that I'm looking for the week, again after a big expansion like this, if you notice, there aren't many weeks where there's like such a large expansion that's followed by another large expansion. Typically, that next week is a little bit smaller candle, sometimes even the opposite color, just meaning that it was probably a retracement or the beginning of a reversal. And so, being very nimble about this week, not really expecting anything too crazy, but also utilizing the information from last week, which was the price action that led to dollar being all the way on the lower portion of this monthly inefficiency. So for sure, just from a weekly perspective, this midpoint, which is 100.358, as far as any upside level that I'm keeping my eyes on, it's there. But also the 100 even level, and we'll look at that on the hourly chart more closely. But so the 100 level, then 100.358 as far as upside. I would like to see if it's able to get up there, how it responds here on a lower time frame. It may give me some ideas for some intraday setups. And then the other levels are going to be, of course, the low of last week, because on Friday, as you can see here, this was Friday. So it printed the low of the week, but that retracement created the tail of the weekly candle. the retracement that happened on Friday. And so it closed here. This one opened around that same price, and so far it's moved above and below that opening price. Currently, a bearish candle on a weekly, and so again, this low here, which is 99.578, and then this low of the monthly inefficiency, which is 99.418. So both of those levels, similar to the 100 level, and this kind of looking at that as like a boxing price in, as price isn't very likely to have any large movement compared to last week. So those reference points are important, in my opinion, for me to be able to frame some sort of setup based off of the way that price is moving around those levels. And so now daily, which is already over here on the right, but what I'm gonna do is actually I'll drop this down to the hourly, and then I'll make this the daily. It's just a little bit more space over here. And so looking at it from the daily perspective, so there was this breaker, right? Traded up into it, about the midpoint. Show respect, broke this inefficiency here, gapped lower for CPI, and that's when it smoked all of those lows. And then Thursday continuation lower, retracement on Friday. So order flow is very bearish so far as well. Just keeping in mind this low to this high is an inefficiency, could easily act as resistance, which seemingly has already, as price did initially trade up into it here, but then was rejected very quickly. And then speaking of that 100 level, I'll just use the cursor here. So that 100 level here, notice how sensitive that level is as well. How many times price on that hourly time frame has reached up to it, but then not been able to find any sort of momentum to stay above it, and then find support on that level. So that's why, like I said, I'm also watching that 100 level as a key level, as well as this 100.358. Those are going to be my main key levels on dollar. So for the people that are already familiar with charts and analysis and things like that, and actually I do want to just mention real quick, as far as analysis is concerned, I've mentioned this before, but there are three types of analysis, right? So there's technical analysis, which is basically what I'm specializing in, what I spend most of my time developing myself in, is technical analysis, which is simply just using time-based price charts to look for repeating patterns that can be taken advantage of. And some people, when they hear pattern, they may think like candlestick pattern, which are taught, like they can be googled and there's lots of them. Not necessarily speaking about patterns like that. Like I don't want to, I'm not looking for any particular shape necessarily. I'm looking for patterns in the sense of like repeating phenomenon within the marketplace, right? Like signatures that repeat more often than not and kind of give some sort of indication of what's going to happen next. So those are the types of patterns that I'm talking about. But so again, order flow is bearish. The month began with this white dotted line. So the month saw three consecutive up close candles, a bearish engulfing, and then smoked through here, which made that a bearish breaker, found resistance at that bearish breaker, and then just been breaking and seeking sell side liquidity. So that's what I'm saying. As far as how far low it got already, I'm not any way, shape, or form looking at this as a low being printed and for higher prices to start to come back into the dollar. As far as I'm concerned, like I said, it's trapped between this level here and this level here, and how it fluctuates in between those two levels this week should be helpful just to take some intraday scalps on the assets that I do trade. And so there's been a lot about dollar, but the reason for that is because dollar is like, I call it my right hand man. So typically when I am trading, I have this layout here where I have the dollar on my right, and then I have the asset I'm trading on the left. And that's just because the dollar is definitely very influential on other assets in the financial markets. just the way that it is. Dollar is king currently in the global economy, and so trust and believe that the dollar chart is very beneficial to study, in my opinion. But so so far, and I'm gonna go now back to how it typically is. So daily on the right, hourly on the left, and so far for this week, right, yellow is the opening price of the week. Consolidated on that opening price, dip lower, running below these lows here, not quite getting back into this hourly right range. That could be a flip. Um, well, it is an inversion fair value gap already, but it wasn't retested again here. Said just ran those lows, pushed higher, clearing the highs, back down below the weekly opening price. So nothing too significant yet, pretty much as expected, right? The market needs time to catch its breath. It ran a lot last week, and so I'm just going to be very patient, like I said, and just really focus on those higher time frame levels, right? Because I have no real hardcore bias about which direction it's going to be going. If I had to choose, I'd say here before there, but I would also say if it does get here first, then I'm definitely looking in this area to see any signatures of it start to break down again. Because if it's to get there first and then start to break down, then I'm going to have increased probability for it to reach down to this level after that. If, like I said, if it gets there first and then starts showing weakness, like it's breaking down, starts back running lows, picks up bearish order flow again, then I have no doubt in my mind that's going to reach down for this level here. But of course, before doing that, it will have to take out this low, so it'd be this low, and then it'd be that level there. But again, so that's dollar chart for you. Uh, I want to talk about Dow Jones just because I did spend a little bit of time going back to it last week, whereas I had for a while really just been focused on E-mini S&P, but Dow Jones is like my first love. Well, Nasdaq is my first love with indices. Dow Jones would be my second love, but I think I actually like really love the Dow Jones. Right? I kind of thought I loved Nasdaq, but now it's like I'm starting to think that maybe I'm in love with the S&P more just because it's not as crazy. And let me give you an example. So this is like I said, hourly on the left here, right? So looking at it from the hourly perspective, I've already shifted over Sunday and Monday, but the rest of the week is still there, right? Tuesday, Wednesday, Thursday, Friday. So focus is going to be starting in Wednesday here. So this was Wednesday. This was when CPI happened, right? Got that big pop higher, right? And then just notice how that high was maintained all the way until today. Reached it twice, and then finally was able to break above it, but then rejected, closed back inside the range, right? And so now compare and contrast that with this is Nasdaq here, right? So again, focus is that Wednesday high. Look at how Nasdaq pushed, created that high on Wednesday, retraced, and then eventually took that high out and continued higher all the way up until Friday, and then it finally retraced back into the range. S&P Wednesday here, right? CPI pops higher, retrace, eventually takes out that high, continues higher on the Friday, where then it retraced back into the range. And so again, going back to 30 real quick, or Dow Jones, just noticing the difference how it didn't share that same price action. And so it was unfortunate that after Wednesday, my focus shifted to Dow Jones. All up in this mess, I was looking for the buy to go and take out that high since Nasdaq SPX had already done it. And just going back to the three types of analysis, right? So there's technical, there's fundamental, and then there's sentimental. And so I tend to focus on technical, but I am getting experience with fundamental and really starting to see the value of sentimental analysis as well. And those can all be Googled, right, to kind of give you your own definition of it that you can rock with. But those, like I said, are like the three main types of analysis when it comes to the financial markets. There's also a time element. And so, as far as the technical analysis, that's probably the hardest part about it is waiting. So, where I'll have an idea of where price may want to get, for example, this high from Wednesday, but I can't say when it's going to get there, right? And so, what I am trying to do, as far as my development is concerned, is to allow for myself to be patient with my analysis, meaning that if this is the setup that I'm looking for this high that we ran out, then there's really shouldn't be any reason for me to deviate from that plan. It just simply, if I see anything that's not qualifying a run to this, then I shouldn't be a part of it. Long story short. And so, like I said, I got caught up here trying to get to that high, wasn't able to do so. Was looking for the same thing on Friday. As you can see, it got very close, so I wasn't able to get out where I wanted to, but I was able to see some sort of a run in my direction, right? Which is a good thing, and that's why the other thing I want to bring up that there are also three types of is management, and so in no particular order, there's risk management, there's trade management, and there's self management. So as far as risk management is concerned, that's just simply the decision made by the investor about, okay, hey, this is what I have, this is how much of what I have I'm willing to risk. Can I participate in the potential right setup or play or investment that I'm thinking about? And so that's where risk management comes in, right? Just doing the number crunching about what's the risk, what's the potential reward, right? The second one that I mentioned, and like I said, there's no particular order, but the second one I mentioned was trade management. And so trade management is simply something, for example, like like I say here, I'm in all of this chop trying to see if I can catch a run up to this high. So being positioned within this chop, part of trade management is risk management. And so every trade should have pre-identified levels that invalidate the setup. And so for me, as far as Thursday was concerned, now I want to bring your attention over here to the right side, right? So and I talk about inefficiencies a lot. So if you've been rocking with me, you should kind of have an idea of what they look like and why I like them so much for sure. But so between this high and this low on a daily chart, right? Put a line there, stretch it out. That's a daily inefficiency, right? Where I would expect some sort of a sell side delivery in that range for a potential to find support and leave that range, which is exactly what it did. But it was split between, well, actually, not even split because, again, the way that these markets work is, as far as Central Time is concerned, the indices they open back up at 5 p.m. for a new day. So the beginning portion here was actually Tuesday, but I mean, it was actually Thursday. But once it became 5 p.m. here, this is actually Friday's trading. So Friday actually dipped down into this inefficiency because it was actually what was left between Tuesday and Thursday, right? So the high of Tuesday and the low of Thursday. That's what created that inefficiency. Friday early trades into that, right? Was not able to get below it on a lower time frame, didn't even color outside the lines, right? And then it breaks back above early in London session on Friday and see this run higher, like I said, which did fail to reach there. And so now this is where I'm going to bring up that third type of management, which is self-management, right? And again, no particular order, but if I had to pick one, this is probably the most important one. And that's because self-management or lack of self-management is something that has gotten me in trouble, like really bad financial trouble, because like I said, I can't exactly time when price is going to go to the level that I'm anticipating it getting to. That's just one of the hardest things, right? Is I have to submit to the market's time. It's not on my time. But so the trade management aspect of this, right, was simply me understanding once this day ended, right, it was the official formation of this buy side imbalance, sell side inefficiency, right, this fair value gap here. Once Thursday's trading ended, which was on this candle here, right, that officially created this range in here in which I could anticipate support. And beautifully, right, in hindsight, I can see it beautifully acted as support. And so there was no need for any transactions placed here seeking a high to have been tampered with, right? They could just been let free to run until there was some sort of invalidation of this support or this potential support here. But again, just speaking right from hindsight, that didn't happen, right? It did find support in there. It left that range, but it failed to reach this high. And this is where again where I want to bring up the self-management part. So now here it got within, I want to say 4 points of that high, literally within 4 points. If you look up here, right where it says H, next to the H, 34788. That level is 34792. So literally got within 4 points of getting there before it started collapsing to end the week, right? And so the point that I want to make is that in this business, it's not like one cookie cutter approach, right? It's not nothing is easy, I'd say. I mean, things can be simplified, but they're definitely complicated at first. Time, energy, effort put in can then kind of make them easier, right? Simpler for the individual. And so this is one of the struggling points that I've had to overcome is something like this where it gets to almost there and then it just starts to pull back away and my ego wants to be stroked so bad, like I want this level to be hit, right? But then it does all of this, ends the week here, right? New week opens up, there's a gap lower, trades into this hourly range here, pushes higher, but is not able to find any significant momentum off of that weekly opening, actually breaks back down into that range. And so that's where I'm saying the self-management part is important because at this point, I'm gonna be completely honest and transparent. I threw this idea, this reference point out the window and was like, okay, you know what? It already tapped the zone. It failed to offer any significant support. It really just traded back into the opening gap, right, for the week and it rejected lower again. So then around here, I actually shifted short term my analysis to being bearish, meaning I was looking for it to actually break out of this range, and I was willing to be short for that to happen. And then now looking back in hindsight, right? Really just seeing that okay, the week had just started here, so this is really a relevant price action. And then this is actually a real session that begins. So the first real session of the week is that Monday London session, right? That Monday London session essentially just ran the liquidity under here deeper into this range, right? Putting bodies at that midway point of it, never getting all the way to the bottom, and then coming into the New York session, right? Starts to expand out of there and was able to eventually, right, get to and through that high. And so that's why, again, self management is super crucial. Just really taking note of any type of personalities or characteristics within myself, right, that are going to trigger me to maybe lose sight of the objectiveness, right, of the things that make sense because now I feel some type of way about it, you know, 4 points shorted me here from stroking my ego, and now it's doing a potential deeper retracement, right, for the week. And then before I know it, it's reaching up to here, triggering my alert, and I'm upset with myself because I'm like, oh man, dude, like, why weren't you keeping your mind on this high being ran out? The other two assets ran that high. Dollar is still bearish. There's no reason to really be trading against that bias right? Wait until this high is taken out or until some sort of confirmation that it's not going to be taken out happens. And none of that was the case. So I actually did miss out on this run here and was feeling really bad about it. But again, this is part of the reason why I'm taking the time to do this. Is like a video journaling process for myself to just be able to have a online track record for myself and others to really be able to see the growth from when I started. This was like the last week of 2022, right? And it's very apparent to see just the growth and everything like that, just from going from even videos I produced, a couple of months ago to now. But so this is like I said, why I want to really just focus in over here on Dow Jones primarily. I also really quick just want to talk about a few other assets and some levels I'm looking for, and then I'm gonna end this video, right? So gold, I feel is in a tricky spot. So I'm actually low key bullish on gold. I do really like how gold worked its way into this range here and was able to find support. I'm really looking for, like I said, gold to potentially push back up to the 2000s. And so just need to be able to qualify that, right? And so far, this is what I'm working with. I had these two ranges, right? One potential resistance, but it's already worked its way up to it as far as bodies are concerned and wicked outside of it. Retraced already as well back to the low inside of this inefficiency. So, of course, in my mind, if it breaks right below this blue shaded area here, then I'm literally looking for, right, this level here, and then potentially maybe even back down into this range here. But before that, the midway point of this wick. So those just again just the level of progression as far as it has to break right the higher level before it gets to the lower level, right? And it has to break the lower level in a sense, right, before it gets to the higher level. So it's just like common sense, but just keeping those things in mind, right, on a high time frame, all of these levels have their role to play as far as aiding me in my analysis. And I'm just an intraday trader. I'm not someone who holds trades for days and weeks and months and stuff like that. Not yet. I will get into like some investing once I really dive into the stock market. That'll probably shift my mindset to be able to do those types of things. But for now, I'm really just like I need the money now type of guy, and that's why I believe I like day trading, and I really love going into the smaller time frames. I don't really show it so much on the videos because the higher time frame does take up enough time as it is. Also, just explaining like the thought process that I'm going through, right? But that's gold. Like I said, I'm definitely bullish gold, and so I guess that would really mean right. Just I would like to definitely see that continuation lower, or at least just like continued lack of strength in dollar, just meaning for it to not run above resistance points and start finding support there. If it wants to just right be chopping around in the consolidation, that's cool with me as long as it allows for gold, right, to like I say, be bullish, and then also AU. So this is one I recently added to my watch list, AU and UC, and I'm looking for these highs to be taken out. So this is actually the high from June. Looking at its cousins GU and EU. They've GU smoked that high days ago. EU, same thing, right? So they've already smoked that June high. They should move in sympathy with each other, right? Seeing how USD is also a pair that they're traded against here. And so that's why I'm using all of them, right? If I'm going to be looking at a dollar chart so often, the other pairs that are linked with it to trade, I'm very interested in looking for setups in those. Especially sometimes the indices will be choppy, or for example, they'll do things where they're not exactly following along with each other. I'm not a big fan of those moments. I realize that those are very low probability moments, and I really should be just sitting on my hands when it happens. But then one thing I do want to just mention about S&P real quick, and then I'll look at UC and UJ, and then we'll get up out of here. But so this, and again, let me go back to the weekly just to show you, right? So on the weekly, There is that range there, and I don't know why this keeps happening where like it the shortens this for whatever reason. But those are the reference points. So it's between this low and this high. There is zero trading there, right? There's no candle bodies, there's no wicks or anything like that. That's the darker area. And so I was looking to see if it will get to that high point of it, and it got very close. Um, if you can see, let me just do this real quick. All right, so the high point of it is actually 4566.75. The high of this candle is 4565.75. So 1 point off, literally 1 point off from reaching that level before it rejected um here, right? So this literal candle from 2 p.m. East Central pushed up, got within 1 point before it rejected, and then this orange dash line is just the midpoint of the orange shaded area, right? So I like, of course, the midpoints of ranges, and the I expect to see some sort of sensitivity there, and if there is no sensitivity there, then I'm definitely expecting it to reach to another level above that. If it's right, if the equilibrium of the range is above me and price smokes through it, like for example, this candle was able to close above this range and still be just that 1 point short, I wouldn't just be looking for that 1 point. I'd be looking for it to reach up to the high of this, right, which is that larger range that this one is actually inside of. So little things like that, right, are those types of clues that I'm looking for as far as just allowing for price to tell me a story that I can try to take advantage of, right? And so, like I said, that was EU, and I did mention already as well in the last video that as far as the month is concerned, um, I'm not gonna look at a month that drops down for a couple days but then expands like this through it all crazy and expect for it to be all of a sudden a bearish month, right? It could have some sort of a deeper retracement and close as a less bullish month, but as far as any sort of right reversal, it taking out the low of the month or anything like that, definitely not looking for that. That's nonsense in my opinion. There's lots of support that would need to be broken before that happens, as well as some sort of a real sign that is starting to break down. And on top of that, I would love to see right the dollar start to find some strength. So just a few things that will have to help me qualify any sort of right reversal, and it will have to make hella sense. But so last but not least, we're gonna look at USD CAD and USD JPY and get up out of here. So USD CAD with the weakness in dollar, right? I'm seeing that for the month had that similar, right? Started pushing higher, and then all of a sudden it broke down, and it actually turned around. I believe that's a weekly level. Yeah, so it's the midpoint of this down close candle on a weekly. Actually tapped that, and that was that rejection at the end of last week over there that sent it back up to this old low from November 2022. And then now it's just, as far as yesterday was concerned, moved above that high, but then lower again. And so far, inside day of yesterday's range. So I'm really just looking for this to follow suit with the dollar, right? So I'm looking for lower prices potentially in the dollar. Then I'm going to be looking at, of course, yesterday's low, and then the bottom of these candles down here. But I do also just want to mention, I did say about when breakers are broken, it tends to be followed by some pretty explosive price action. So this was and it had the potential to be a bearish breaker once this candle here closed below it, but Friday engulfed that candle, so essentially invalidated that breaker the very next day after it was validated. And seeing how yesterday traded down into it and rejected out of it, so it was going to be hard for me to really consider any trades in USD CAD just because of that fact right there, that even if the dollar is bearish, There's this potential range here that could now be acting as support in the form of a invalidated breaker. And like I said, I've seen some pretty explosive price moves happen, or potentially even like this range here. So I've got the Fibonacci for the month, right? So from the low, well, really from the high down to the low, any retracement, right, higher, these are what these levels are ultimately measuring. Actually, I did change this up, so let me go ahead and put the new one on this, John. All right, and so boom, and it's extended too, so that's cool. But anywhere within these yellow lines over here, once it gets above that 50%, so there's the pink shaded area from the weekly, and then there's these three levels in here, where if it does push higher, contrary to the dollar moving lower, all right, I would just be looking to see for it to get up into this range and then start to follow along with the dollar. Even if it doesn't, again, break down and start attacking all of these lows and just stays within this range. What all I'm saying is the time element is important right now, because I'm going to give this thing time to give me more information that I can then make use of for a more higher probability opportunity. For right now, this one is definitely a lot very 50-50, seeing how it's like I said, so the dollar is the base pair of this, so it's the first one. So if the dollar's moving higher, I expect it to move higher. If the dollar's moving lower, I expect this to move lower, like in sentiment with it. So the dollar on the daily had the right guys. You see that little push up at first, but then it just slammed lower. But then compare and contrast that with this, right, where it had to run higher, lower, but it's already had a really strong retracement into the monthly range already, almost back up to the 50%. Okay, so anything even just above 50%, honestly, there's this inefficiency here that it could find resistance within. Also, and then also just looking at this high, low, higher high, this candle as well could be a bearish breaker. So I'll be keeping that in mind as well. I'm actually gonna now shift this to that candle now so that I can go ahead and qualify that honestly. Just make sure I take the text on the top right like that. Too much going on inside for it to really be useful there. But so boom, that's UCAD, and then UJ, right? Same thing as dollar. So had some consolidation to start the month. Very explosive run lower. But the thing about UJ is there's this monthly inefficiency which it ultimately broke into, got above, right? Closed the last month above it. But then this month has already dropped all the way back down through that whole range, right? From high to low and below. So on a weekly, also smashed through some weekly inefficiencies. And then there was this old monthly high as well from March of this year. So as far as UJ is concerned, still very bearish, right? Just like the dollar. So also taking note of the fact that there is this daily inefficiency wicked into that before that rejection retracement on Friday, which was a bullish engulfing candle right into this inefficiency here. I see how the midpoint of it measured out. As you can see, this low to this high just anchored it with a fib with just a 50% showing. So that's what that level is right there. So as far as UJ is concerned, right on the upside, I'm being patient. I want to see it get to this level first before I look for any continuation lower. And then this right all of the levels down here. So basically this green line, the gray line, and then this well, and then of course the midpoint of this wick, and then the low here. So there's four potential downside levels to just monitor right the way that price is responding, what's going on with the dollar, things like that. And so I know this one was kind of long, but because I didn't do the typical review and outlook style that I've been doing, whether that be like over the weekend or like Sunday right after the market opens, today was one where, like I said, the market needed time to breathe. I needed more time to see more price action to really be able to qualify if the continuation still made sense, because a lot of things did on Friday begin at least some sort of a retracement. And so Monday was just the confirmation of whether or not this retracement and a lot of these assets could, right, be setting up some sort of a reversal, or if it still makes the most sense to continue with the original bias, which is, of course, right, for UJ bearish, for USD CAD bearish, Euro USD, right, also looking forward to reach the high end of this range here, which is from the weekly, right? So this weekly range in here, similar to E-mini S&P, so reaching the top there. GU don't really have any targets for GU, so I won't be touching GU. Like I said, AU, I like this high from June as a target. Gold, like I said, if it can get above here on a closing basis on the daily, 1975 for sure, and then potentially up to the June opening price before maybe making a run for June's high. And then Dow Jones, so it did reach, as far as the daily chart, it did print a new high for July, but also there's that June high, and then this is from relative highs from higher time frame as well. So all those levels, as far as upside potential, are also less than 200 points for Dow Jones, which Dow Jones could do in an hour easily. Nasdaq also no upside objectives at this point, but the midpoint of this wick was an area I was watching. So on the hourly, it did reach that and it immediately showed sensitivity. But then a couple hours later, it closed above it, right? Started acting as support, printed a high above last week's high. So it took out a last week's high on this run here. So could be setting up for potential retracement. Also, just keeping that in mind, right? That I did mention prior to all of this that a deep retracement was due. There was a bit of a retracement right to begin the month, and then explosive rally coming right out of that retracement. So again, not really trying to call a top, but just keeping in mind that I'm also not really too excited to be hopping in buys once the market has already been this exaggerated to the upside. Would like to see some sort of a consolidation or pullback first, to then try to qualify whether that's the beginning of a reversal or, like I said, if it's just a retracement consolidation for another push higher. I've already mentioned ES, right? Looking for, well, the top of the orange and then the top of the yellow, and then dollar down here. So that is going to be it for this weekly market outlook. Hope that something that I mentioned has been helpful to you if you catch this in time before the rest of the trading week expires. But just want to shout out to the believers, shout out to the homies that inspired me to be better each and every day, right? Shout out to the dreamers, right? Y'all are my people. I love you. I thank you, and I will catch y'all on the next one. Be safe.